All right, what's up, guys? Welcome. Like I just shared, this is one of my favorite topics right now. The only focus of this call is to help you become more aware, help you stay 3, 4 steps ahead of what's happening, not just in Web3, but in the economy, help you become a better trader and give you some type of advantage in Web3. You can really cut your learning curve in half by getting around people who have already been where you want to go. For you guys that don't know me, I'm Peter Voogd. I'm the author of 6 Months to Six Figures, 7 Rules to 7 Figures. I've been an entrepreneur for the last 17, 18 years. And I got into Web3 in 2017 after speaking in Tokyo at an event with some good friends of mine, Tim Sykes and Gerard Adams. And I was introduced. I was super skeptical, but once I understood the power of the technology, I really started to dive in. I was able to get into Bitcoin at around 4K. I was able to get in Ethereum at like 100, and I think I have it documented. I bought 20 or 30K at $118. So I've been in the game. I've been through ups and downs. But I'll tell you, about a couple weeks ago, my good friend Douglas James, who some of you guys know, who's built an 8-figure business in Web2 and done multiple 7 figures in crypto, he connected me with Nick. We had some great conversation, and Nick actually introduced me to someone named Evan, who we had a conversation, all 4 of us, and I was mind blown by the quality of value that I gained. And I'm in some deep circles. I'm in a lot of deep circles that teach me a lot. It was really cool and refreshing to learn that type of value around Web3, because it got me thinking a different type of way. And once I got on the call and realized that they look at Web3 differently, they're ahead of most people. It really makes sense why most people don't make money in Web3. And it's important to conceptualize why the 1 to 5% do make money and why most people don't. The technology is amazing, but it is still the wild, wild west. Most people don't make money, and most people don't know how to play the game. Some people don't even know what game they're playing, to be honest. Some of the stuff Nick talks about might seem unorthodox, and you might be like, whoa, that's the different way to think about it. But it's actually a lot of it's first principle thinking. It's actually thinking very intelligently. So you guys will be in for a treat. But we're going to talk, is it true or not? So you have a very deep network. You've done a lot of stuff with Joe Polish, who runs the Genius Network. I'm sure Dan Sullivan, Dr. Jeff Spencer, who had Tiger Woods, U2, Lance Armstrong, Richard Branson, Jim Quick, some of the biggest names in the world as clients, as a friend. Chris Voss is a partner who's one of the world's top negotiators. You've been around a lot of heavy hitters. Here's a loaded question that I want to start with. What are your current thoughts on the landscape of Web3 right now?
My personal opinions is you have blockchain, and blockchain, just keep it simple, it's just a technology that stores data in blocks instead of columns and rows. That's all it is. So you go ask somebody, what is blockchain? And they'll give you a million answers, and very few people will tell you it just stores data in columns and rows. It's non-fungible. It's validated, the way that the decentralized networks are anyway. There's centralized blockchains. IBM has one. Bank of New York has one. And then you go cryptocurrencies, which are just the assets that are stored on the blockchain. So blockchain, I believe, will be ubiquitous. It's already becoming ubiquitous. Will it be public? Will it be private? Will it be decentralized? That remains to be seen. I think you'll have private blockchains like IBM has, like Microsoft has. And you'll have decentralized blockchains like Ethereum, and whichever ones survive. The cryptocurrencies are just the assets that are stored on the blockchain. So that could be tokens, it could be NFTs, it can be whatever. And then Web3, generally, the way I interpret it, when people say Web3, they mean one of those two things. But if they're actually talking about Web3, they're talking about a more decentralized internet. I think the big winners will be the ones that are in cryptocurrencies, blockchain assets early, and understand why they're there, and understand like an appropriate time preference. Like, I'm going to buy this. If you bought Ethereum, or if you bought Bitcoin 10 years ago and never looked at it, you'd be sitting really pretty right now. And anytime somebody says to me, I wish I bought Bitcoin at $1, my response is always, no, you don't. Because you are you. You would have sold it at 2. You would have rode it to 3, panic sold it at 2, nothing would change. So this whole idea, like, man, I wish I had a crystal ball and would have done this earlier. You don't. That's not who you are. You don't have whatever you need to ride out the vicissitudes. So that's a very small segment of the population, and then there's probably a whole bunch of those people on the call that have that, the capacity to do that. And I think the next big winners are the ones that understand and invest in like what we call Web 2.5. It's Web 2 enough to be comfortable and safe and have like the features you expect, customer support and et cetera, et cetera. But fundamentally, it's, the data stored on the blockchain, the transactions are stored on the blockchain, hedge funds, but like hedge funds that their trades are written to the blockchain are going to be easier to audit and they're going to be safer. A hedge fund, standard hedge fund, but the backend is on the blockchain. So I think identifying the projects that are building on the blockchain and building Web 2 interfaces are probably going to be the biggest winners. It's important. You don't have to agree with me, but you kind of have to think like, do I really believe in a fully decentralized world? Do I really believe there will never be a fully decentralized world? Or do I believe there's a middle ground like Web 2.5? Because that will inform your investment decisions. Elon Musk said it recently where Web3 generally is more of like a marketing buzzword. But I think there's a middle ground that's not fully decentralized. It gives people autonomy, maybe gives people a choice. Do you want to own your data or, we'll own your data, but here's the trade-off. Here's the benefits of us owning your data. Here's the benefits of you owning your data. And so I think we're going to move into that world, and the biggest winners will be the things that underpin those companies and those projects.
Why aren't most people making money in Web3? So here's what I see, Nick. I see billions and billions and billions transferring hands and going into Web3 every day, every week. Yet most people don't make money, which means the 5% are making an absolute killing. Why do most people not make any money when there's so much money in Web3 or online?
In my opinion, my observation, one is they don't know why they're doing what they're doing. Like that's probably the biggest one. So the pattern is like you go to trade commodities and you're sitting on your exchange and you're long, short, options, collars, all this stuff. And you really believe that it's a zero sum when you're trading against other traders, right? Like that's a very common one winner, one loser. And I get it as a trader, as a speculator, sure. What you fail to understand, or what a lot of people fail to understand, is that in commodities, futures in particular, there's two winners on either end of the trade, bona fide hedgers. The market exists for bona fide hedgers, and it allows other people to speculate. As a speculator, the market's not built for you to make money or lose money. It's built to let you participate because it provides liquidity for bona fide hedgers. And the only reason I bring that up is if you don't know the function of what you're doing, it's really easy to get confused about what's going on. Crypto similar, stocks are similar. There's this disconnect between your experience and your belief, and it grows and it grows and it grows. Where most people end up is they're like, expectation does not meet reality. They're not aware of this huge gap between their belief and their behavior. So they stop trusting themselves. They say, fuck it. And they just start following everybody else. And I'm speaking very generally. There's obviously exceptions, but by definition, if you end up intentionally or unintentionally doing what everyone else is doing, like you are, again, by definition, behind. So it's like, man, why can I never be early? It's because you don't have a fundamental macro belief. The decision you're making is see what everybody else is doing. So yeah, you're going to be behind. The two biggest things is one is frequency of exposure, meaning I believe the only purpose of looking at data is to inform a behavior change. If you go to pull up a chart, ask yourself, am I going to buy more or am I thinking about selling? If not, don't look at the chart and you'll see how hard it is. And then you got to reconcile all that. Like, why do I want to look at this? Because you're trying to get some free dopamine. That's why you're trying to hit, you're hoping it's up and you can experience euphoria. I believe in Bitcoin. And this is the timeline that, based on the logic, reasoning, and evidence, like this is a timeline I think is appropriate. 5 years, 10 years. If you're saying, look, Bitcoin in 2035 is going to be worth millions of dollars, and I'm riding that, cool. Make your investments. If you DCA, put it on auto, do whatever you got to do. And then work really hard on not just peeking at it to see. Because that's the risk. The people that make a lot, that I know, that make a lot of money in crypto are either great day traders or they sat in something they believe in 7 years ago, and now they're doing very, very well. And all the stuff in the middle is really, really hard. It's really, really hard to do well.
Douglas got me into and had me looking at Guard, a project Guard that some of you guys are in. I've talked about it. You were one of the early voices. Can you share what you saw that you were like, you know what, this is something I want to put, I want to get behind. I'd love to hear that.
I was with a group of people, and we were just hanging out. I was doing stuff like this, and I was just sharing over the shoulder. And the BNB chain at the time, now there's Solana and Polygon was glitchy. Was looking for a really a network that was just cheap enough. Like Ethereum, you'd lose your ass just trying stuff on transaction
Sure.
fees. So we were just looking at the BNB chain all the time because it was so cheap. It's like 1 cent per transaction. We could test stuff. And we were in conversations. And it was like, here would be the asset that I would dream of. It would have a lot of properties similar to Bitcoin. The primary one being the limited supply. A lot of these meme coins, and you remember that not all coins are designed to go up. They have utility, and people forget that. Like Ethereum's not made to invest in so that it goes up. It like validates and secures the network. It's got a function, and so people forget that. So some tokens are inherently inflationary for the utility. Others may be deflationary for the utility, but probably to create supply shock. So all these assets are different. And I was thinking like, man, if I knew what I knew now, I would buy so much Bitcoin at $1, wouldn't we all? But I can't. So it's like, what properties make it so appealing to me other than the fact that it went up a whole bunch of multiples? It's like the limited supply. There can only ever be 21 million Bitcoin. And not most of it, but a lot of it's already been locked in, keys lost. And so it's in a sense, because it's non-inflationary, it's deflationary. Like every day there's some Bitcoin that will never be recovered and go back into the circulating supply. So functionally it's deflationary. And I like that. And there's more than 21 millionaires in the US alone. So just fundamentally, forget the tech, forget the crypto. You're saying it's something that people want, and not even every millionaire can have one. Psychologically, I like that as an investment. I place a high probability on the value going up. That's just supply demand. Guard has a 50 million supply, so it's not 21 million, but it's 50 million, which is significantly less than the billions and trillions in Epi and Doge, Monkey, and all these other coins. So understand that large of a supply makes it really, really hard for it to maintain any positive price action. There's a ton of it in circulation. So it's on the BNB chain. That's just happened to be where we were. I like the limited supply. So we got in it, and we had a significant influence on it, and just started talking to different projects and explaining why we like it and what we're planning on doing. And they got on board. And like Night Swap on the BNB chain, I know the developer really well. And it's like, I don't know if you guys know this, but the way liquidity pools work, it's 1-to-1. So when you start a liquidity pool, and I apologize if this isn't interesting to you guys, but it's helpful. If you start a liquidity pool, like you launch Peter Coin, when you first add liquidity, you set the price. So if you put in, I'm going to use stables to make the math easy, but you put in 10 USDC and 10 Peter Coin's worth $1. That's how you set the price. And if you guys don't know that. Right. So when you buy from a liquidity pool, you're putting USDC into the liquidity pool and you're taking Peter Coin out. And that's how the price changes. It's the ratio of the pair. All right. So if you have, let's say, I'll say Guard because we're talking about it, Guard and BNB, if BNB goes down, and you see this in the market with meme coins, right? When ETH goes down, it pulls all the coins it's paired with down with it. It has to, because they have to maintain a 1-to-1 ratio. So if you see your whatever favorite meme coin on ETH, if it goes down and ETH is also down, it's probably not a reflection of that asset. It's a reflection of the market as a whole because it's all paired with ETH. Hopefully that makes sense. Mm-hmm. So it was like, well, what if, and I asked NightSwap, the developer NightSwap, like, could you just make most of the pairs stable so that, the guard in particular in this case, but there's other assets that do this too, is less sensitive to the fluctuation of the market? And he said, sure. I was like, okay, well, now I like it even more. The downside of Bitcoin is that it's old and slow. Like, it's really hard if you have a lot of business acumen and you're like, okay, I know how to build a business. I know what consumers want, which is like speed, safety, all that stuff. You can't build it on the Bitcoin network right now. Nobody's going to buy your thing if it takes 14 minutes to process a transaction, So it's like, well, Ethereum is similar. It's less expensive and faster, but it's still clunky. It's like, is there a way we could take an asset that is not a network and build on top of it? And so we started tinkering with, can we build on top of Guard? Because, we know governance is coming. It's here now, but back then it wasn't. We know governance is coming. And it's like, what if we could build on top of it, take Guard as earned revenue, buy Guard with some of our profits, and control governance and have an influence over what this actually becomes at scale? And that's where we're at now. The governance is live on the Guard Foundation. I build stuff on top of Guard. Doug builds stuff on top of Guard. We have partnerships. Doug and I both, Evan and I do as well separately, that build on Guard. And that's I like the properties of it. I'm not worried about the short-term price action. And the governance aspect is, I don't know what's going to happen, but a year from now, 2 years from now, 3 years from now, it might be very useful to be able to kind of control the governance, and the hope is that other projects feel the same way. Because if you get 4, 5, 6 big projects that are actively acquiring the asset to control governance, what happens to the price action. And generally speaking, these projects, in theory, bring far more than retail investors do. So that's why I like it long term. Crypto is incredible if you can define that, because now we go, okay, I go bonds at 4%, savings at 1%, the S&P, it's volatile, but I'll probably get 7 or 8% over 8 years. Crypto opens up a whole new, there's a new class of 20%, 30%, 100%, 150%. So it gives us better options, depending on where we're at. Not everybody looks at it that way. I don't look at investing in cryptos get rich quick. I look at it as more ways to increase the probability I get what I want. Different things. So if I'm on a 10-year timeline, I'm not really going to do a whole lot with the capital unless I believe it's going to do better than 70% a year on average over time. That's not 70% year over year, which messes people up. Because, if you were in Bitcoin from 20,000 to 60,000, you just got what? Some obnoxious percent. There's 3 years of your return right there. So it goes sideways for 3 years. You're still getting on average 70% a year. And what I realized is I felt like I could get a better risk-adjusted return over those 10 years if I took Guard, paired it with BUSD, and there was some volatility. There was some question there because BUSD, the whole litigation thing, which they threw out. But so Guard with a stable, what would happen is I thought I would get 70% or more, and I still do. But it's risk adjusted. It's a little bit better return risk adjusted for a few reasons. One, it's paired with something stable, so you still have your stable. And two, you're collecting trading fees the entire time. 10 years of trading fees is not insignificant. So I just said, given my beliefs, I actually think that this pair, given my beliefs, and I shared this with people, I think this pair is a better place for me to sit than what I'm doing with Bitcoin. And for me, that ended up being Guard BUSD. Will it be more volatile? Probably, because it's new. Bitcoin's 13 years old. Does pairing it like the way that I like to pair it, it mitigates some of that volatility because it's paired. But that's the idea. I believe that we should be in this game for one of two reasons. One, because we love the game, or two, to help us get the things that matter most to us in life. So You know, that I'm just trying to override the fear and the greed. It's if you can lock in the most important thing to you, do it.
100%. And that's such a different way to look at things. It totally reframes how you should approach Web3. And that's important. And now it started to make sense why Guard has done what it's done in the past, why it was crushing during the bear market, and why you're focused on building regardless of short-term price action. You said if Dogecoin, if Tesla accepts Dogecoin tomorrow, like Dogecoin's going up because they're building on top of it. Now, here's the problem. 99.9% of projects don't have a Tesla to even accept Dogecoin. So your focus is not the actual Dogecoin, the price. Your focus is building Tesla. And people can't wrap their head around that in Web3. Talk about that philosophy, because that's what people need to realize.
And I appreciate you bringing that up. It can be hard to see, but it's everywhere. Like you just gave a great example. If Elon Musk came out and said, "Hey, look, we're now accepting whatever," we'll say Dogecoin, but Dogecoin's already kind of had its whole, but Dogecoin will explode in value. Let's say Microsoft said, "Hey, we're accepting Dogecoin now," and eventually they will, because they have a fiduciary responsibility to maximize shareholder value. So before regulation, being exposed to crypto, they can get sued. After regulation, not being exposed to crypto, they can get sued because they have a fiduciary responsibility. So as regulation comes, Microsoft start coming in. They have like Indian rupees on their balance sheet because they have a fiduciary responsibility to be diversified in speculative assets as well, right? So Microsoft says, we're going to do Dogecoin. Why? Because given their company, it benefits the company. If Microsoft comes into Web3 and there's it's negative for them, they're going to leave. And that's what people are missing. It's like, oh, they should just come in. It's like, no, because you're going to treat them all like crap, and their dollar per hour is going to go down. Everybody's going to quit. Like, so yeah, like we want big money to come in. So yeah, we want Teslas. And we want to find a bunch of them. We want to build some, we want to find them. But the other end of that is it has to benefit Tesla to do so, or they won't do it.
That's why you
and that's the big, like that's the big gap, in my opinion. If Microsoft came to me today, which they're not going to, so just to be explicit, but Microsoft did go to TRbit. It's in their white paper. So you can go look up Microsoft and TRbit. It's in the Microsoft white paper. They released a white paper saying we're working with TRbit as our security layer, right? Why would they do that? And if you go study TRbit, they work really, really hard to stay off the radar of degenerates, because that huge influx of hype would hurt Microsoft. And if it hurts Microsoft, because all the madness and all the craziness and all the negative, and Microsoft backs out of that deal, it hurts everybody long term.
It now makes sense, though. It's coming full circle, talking to you, for having multiple conversations with you, talking to Evan. By the way, what's pretty cool is it's the fourth non-security in all of fully regulated non-security in all of crypto. So Bitcoin, ApeCoin, Arbitrum, and then Guard, which already gives me massive confidence. This ran to $19, and whether it ran to 19 and then it went down, the whole time they've been building. Now I see why degenerates get mad. Hey, I had this and now it's this. But now I see why Nick and Evan and everybody that's like been in it from the beginning, building on top of it, don't care, because they know where it's going. That's a game-changing shift in perspective. How does building on top of Guard help people that just love Guard and want to invest? And you kind of just answered it. That's kind of how it helps them.
I mean, look, if you accept Bitcoin, or you allocate a percentage price of Bitcoin right now, I think you'd be happy with it. So when you accept $1 in earned revenue, it's $1. And if you put it in your savings, maybe it's $1.04 a year from now. All right. So if you accept Bitcoin and you have it on a speculative sheet where it's a long-term hold, that $1 you accepted might be worth 4 or 5. Right? And so that's one. You could speculate and say, I'm going to allocate to guard, because every $1 that I allocate to guard, if 5 years from now, 10 years from now, will be worth hundreds of dollars or whatever. So that's one reason, is you're just basically determining in advance how to DCA in. If you were to say, I'm just taking a percentage of profit, and you're DCA. That's all you're doing. Governance is another one. So if you said, okay, I want to build on Web3, and imagine if you had, if any of us, and again, this could work out a million different ways, but imagine if you had a company that you wanted to bring into Web3 in a big way, and you controlled Ethereum. That would be a massive advantage. And people don't know this. Ethereum's a foundation. You could Google the Ethereum Foundation. It has governance and everything. But people don't know it because their brain's hijacked by the price of Ethereum.
Yep.
So there's a huge benefit. Like, imagine if you made this decision 9 years ago and you have so much Ethereum that you just acquired passively that you could control governance, you could do a lot of really cool shit on Ethereum. If you could control Ethereum governance, you get the whole entire team. You get their legal team, you get their developers, like they become yours because you control the governance. So if you're like, I want to build this thing on the blockchain, maybe the Ethereum Foundation will build it for me. Write a proposal. You got a lot of votes. So it's a massive advantage to have governing power over projects, if those projects have the resources to do things that maybe you can't do or don't want to do with your resources.
You said 7 years.
Yeah.
Someone invested in Ethereum 7 years ago. It's at $7, beginning of 17, from all-time high. That's a 571x. You put in 5K, you have 3 million. If you just didn't even think about it. That's crazy to think about.
If I have the ability to take an asset, like we see how quickly it went to $19 and all that stuff. Deflationary asset that I can help create stability through my businesses. If I can get the price to go from 30 cents to 60 cents and double every year, there's nowhere else I can get that return. However, if I can build in stability into my own investments, I have more control over those investments. I also never need to sell the underlying asset. And so something that really attracted me to Guard specifically, and it applies to Bitcoin, it applies really to anything with a fixed supply and a really great team. But I can borrow against the asset, and I would never borrow above a certain threshold, but I become my own bank in that regard too. So if I can help build something and then incentivize others to buy the same asset, and we create stability through those buys, not just it just rips up and down. Like, I don't need to see it rip. I need to see it go from 30 cents to 60 cents to 2 years, $1.20. I don't need it to go to 18, 20, and nobody does really. If you have systems in place where you understand the foundation, you understand the way it works. Don't get me wrong, but like, this is just an asset where like I have way more control than I would if I did the same thing with Bitcoin, and there's so much more upside, and I'm able to calculate the risk appropriately. Obviously, I could take a lot more risk if I was doing it on Bitcoin. I'd also get a lot less reward.
Guard is in really good company, being one of only a few US-based foundations, Bitcoin, Arbitrum, ApeCoin. What about legal representation? Because we hear governance, we hear DAO, but like, what kind of actual like law firms are actually backing this?
When you form a decentralized foundation, a DAO, it can't form itself. And so I was right in the middle of all of that, trying to get it, help facilitate this sufficient decentralization. So I learned more than I want to know, because once you know it, you can't unsee it. You can't play ignorant. And then you look around and you're like, oh, look at all these people that are breaking the law. Fenwick West helped form the foundation, the DAO, and Walker's help is the International Legal Council. Cayman's is the only place right now that you can actually have a DAO. I mean, you can have one in Panama, you can even have one in Wyoming, but there's no infrastructure, right? There's no service providers, there's no laws or regulations. Cayman's really the only place that has all of that infrastructure. There's the initial governance structure, and all that is built by Walkers and Cayman in conjunction with one another to make sure that it's both US and internationally fundamentally sound. And then there's governance, and the governance has rules and, a special counsel and all that stuff. I think there's 7 members on the special counsel. And legal's role is the legal. Really simple. So that's kind of the whole their role is to protect the sustainability of the foundation.
How can someone purchase Guard?
So I recommend if you have BNB or BUSD or whatever, as long as it's a BEP20 wallet, you can use night swaps.
There's also a Rocket exchange that you can exchange any of your crypto to BNB. Easy. RocketX.exchange. I use it all the time. You can exchange any of your crypto for anything else. So it exchanges it for you. But buying BNB is easier too. One of the best pieces of advice that I've learned at a young age is invest in things that help you sleep at night and not things that you're stressed about all night sleeping, which is of course a lot of the industry is like people can't even go to sleep at night because they're checking all their investments that could dump that next second. So it actually is, to me personally, refreshing to be in Guard now and to have found this gem, because I can sleep amazing at night. I'm honored to have you guys on my side and to be building with you guys. Thank you. Is there any final words, Nick, that maybe if there's a lot of people still watching that are hungry to learn more. Is there any maybe final pieces of advice you'd give, or anything that they can take action on, or they can maybe write down to learn more about how to know themselves or become a better entrepreneur?
I would just take time to figure out really like what do you need and what timeline. I'm assuming everybody here bought crypto. And if you woke up and panicked and sold and then months later regret it, that tells you about your personality, and that's okay. You can still win. There's so much upside in crypto. You could still win. Just take the last 10x. You don't need the full 1000x. So I would just really think about, what do I need? Okay. And then what's the highest probability that I get it? And what kind of investor am I? Am I a buy and hold? Am I a day trader? Am I what do I want to invest in? Do I want to invest in people? I might say, hey, I trust Peter explicitly. And that's okay. If that's your investment thesis, you just have to know that's your investment thesis. And maybe go, I invest in infrastructure. So if you invest in infrastructure, you might have a little Ethereum, a little bit of Polygon, a little bit of, like, one of them's going to win. Don't know which one. I'm just betting on infrastructure. Do you invest, or, are you betting on a very specific asset, and why? So just know yourself, know why you're doing what you're doing. There's no judgment, and it's perfectly fine. Just stop doing things that don't align with who you are, or try to do less of it anyway. Try to do less things that are not aligned with who you are. If you are a later adopter and you're in crypto, a later adopter in crypto is still an early adopter in like the rest of the world. So that there's a tremendous amount of opportunity for everybody, regardless of if you got into Guard 2 weeks ago or you do it 2 months from now. Whatever's most appropriate for you is probably going to yield the best return because it's best for you.
Awesome.
So think about that.